Hey, it's DPerry, and I am a realtor with property consultants in Bucktown. And today on Logan Square and Westtown Homes Live, I'm going to share with you 7 tips for improving your credit. Here's how to clean up your credit so you can get the least expensive home loan possible. This report is brought to you by House Logic, which is made possible by realtors. But before we get into the report, I got a freebie for you. I got a gift. It's called Market Snapshot. What is it? It is what its name implies. You click a link in an email, bam, here you go. On the right hand side, you see summary information. You can drill down if you want to see the breakdown. And if you click the bullseye in the map, you get to see all these houses, color coded houses, and the colors correspond to these buttons on top, which correspond to the status. So we've got new for sale, sold, pending, expired, canceled. And as you can see, you can filter what you see. You can also sort in a variety of different ways. Most recent, highest to low, lowest to high, etc. And if you click, one of the houses on the map is highlighted on the right, and you can drill down for details. You can see all the pictures and property details such as room dimensions, flooring, you name it. If you've got school-age children, that info is available as well. And of course, your home is more than the 4 walls that you live within. It also includes shops, restaurants, you name it. And so, if you want to see information on a local restaurant, you just click and you can dive down into Yelp, where you can see pictures, reviews, menus, hours, the whole 9 yards. And guess what? Price is absolutely right. It's free, free, free. So if you want it, all you got to do is click the link that's in the show notes. So now, on to the report. 7 tips for improving your credit. Here's how to clean up your credit so you get the least expensive home loan possible. So, getting the loan that suits your situation at the best possible price and terms makes home buying easier and more affordable. Here are 7 ways to boost your credit score so you can do just that. Number 1, know your credit score. Credit scores range from 300 to 850, and the higher, the better. They're based on whether you paid personal loans, car loans, credit cards, and other debt in full and on time in the past. You'll need a score of at least 620 to qualify for a home loan and 740 to get the best interest rates and terms. You're entitled to a free copy of your credit report annually from each of the major credit reporting bureaus, and that includes Equifax, Experian, and TransUnion. Access all 3 versions of your credit report at www.annualcreditreport.com. Review them to ensure the information is accurate. Number 2, correct errors on your credit report. If you find mistakes on your credit report, write a letter to the credit reporting agency explaining why you believe there's an error. Send documents that support your case and ask that the error be corrected or removed. Also, write to the company or debt collector that reported the incorrect information to dispute the information and ask to be copied on any materials sent to credit reporting agencies. Number 3, pay every bill on time. You may be surprised at the damage even a few late payments will have on your credit score. The easiest way to make a big difference in your credit score without altering your spending habits is to diligently pay all your bills on time. You'll also save money because you'll keep the money you've been spending on late fees. Credit card or mortgage companies probably won't report minor late payments, those less than 30 days overdue, but you'll still have to pay a late fee. Number 4, use credit carefully. Another good way to boost your credit score is to pay your credit card bills in full every month. If you can't do that, pay as much over your required minimum payment as possible to begin whittling away the debt. Stop using your credit cards to keep your balances from increasing and transfer balances from high interest credit cards to low interest cards. Number 5, take care with the length of your credit. Credit rating agencies also consider the length of your credit history. If you've had a credit card for a long time and managed it responsibly, that works in your favor. However, opening several new credit cards at once can lower the average age of your accounts, which pushes down your score. Likewise, closing credit card accounts lower your available credit, so keep credit cards open even if you're not using them. 6. Don't use all the credit you're offered. Credit scores are also based on how much credit you use compared with how much you're offered. Using $1,000 of available credit will give you a lower score than having $1,000 of available credit and using $100 of it. Occasionally, opening new lines of credit can boost your available credit, which also affects your score positively. Number 7, be patient. It can take time for your credit score to climb once you've begun working to improve it. Keep at it, because the more distance you put between your spotty payment history and your current good payment record, the less damage you'll do to your credit score. So, this article was written by G.M. Falisco, who's an attorney and award-winning writer who keeps a close eye on her credit score, a frequent contributor to many national publications including Bankrate.com, Realtor Magazine, and the American Bar Association Journal. She specializes in real estate, business, personal finance, and legal topics. So, I hope you found value in that. If you like your very own market snapshot, all you got to do is click the link. The link you see on the screen is live in the show notes, so go ahead, click it now. Nothing to lose. And if you're not satisfied, you can unsubscribe at any time. But guess what? You won't, because it's awesome and fantastic. So, if you have any questions about real estate, call me, Doug Perry, at 312 572 9801, or you can email me at dperry@propertyconsultants.com. Both my phone number and email are in the show notes. I would love to talk to you. I'd love it even more if we can meet.